Hello everyone, in this video I'll be explaining you what are the different ways in which you can invest in India when you are in Canada. So investing in India comes with a lot of opportunity and risk, and that is what we will be explaining in this video. And I will also explain you how I am investing in India when I am in Canada right now. So what are the opportunity? You have to understand that there are a lot of opportunity when it comes to investing in India right now. So you might have heard from your friends or family who are investing in Indian markets right now that Indian market is growing and there is a lot of investment opportunity and the stock market is booming. Nifty is hitting all-time high. So there are a lot of opportunity when it comes to investing in India. But you have to understand that you are in Canada, you are earning in dollars, and over the last 5 years, rupee has depreciated compared to Canadian dollars. That means a rupee is losing its value. So even if you are gaining in value because of currency devaluation, you are not actually gaining that much. And one of the reasons you will be thinking is that I don't want to worry about what's happening in the short term. I will keep investing because I want to retire in India, and in the long run India will become a developed nation, and once that happens I will be moving back to India. And I also have the same thought process that eventually if I want to move back to India, I should have a good amount of saving in Indian market. So let us get started, and I will explain you what are the different ways in which you can actually invest in Indian market. So one of the easiest way in which one can invest in India even when you are in Canada is through investing in American depository receipts. Don't think that this is a complicated topic. It is very simple, like buying a stock. You can consider going to your normal brokerage account in Canada like Wealthsimple, and you can actually look up for HDFC Bank, ICICI Bank, Infosys, Wipro, Dr. Reddy, and these are companies in India, but these are the companies that have a stock that is listed in the US stock exchange, and these are called as American depository receipts. American depository receipts are very simple. They are created usually by banks, and they try to mimic the price movement of the stock in the Indian stock market. They are not usually hedged for currency. Again, that's a drawback, but usually when these stocks are performing better, and these are mostly index heavyweight stocks. What is meant by index heavyweight stocks? That means these stocks contribute to a major portion of the Indian index. HDFC Bank, Infosys are some good index heavyweights that actually move the market in India. So if the Indian market is performing, most generally these stocks are also performing well. So even without opening any account in India, you can invest in these companies and they tend to perform well. And second option is definitely by opening a NRI account in India, and opening an NRI demat account is possible through apps like Zerodha, and it's very easy right now. There are not many complicated processes, but you still have to do a bunch of paperwork and get it sent to India, and eventually that is how you can start investing in India. You can consider investing in ETF like FTBs, which tracks the Nifty 50 index of the Indian stock market, and eventually you can make good returns. But again, the problem is that if you are sending Canadian dollars and converting them to Indian rupee, you have to understand that you are actually losing value for your dollar. But what I'm doing currently for me is that I have opened up fixed deposit in India, and these fixed deposits generate annual return of 6 to 7% usually, right? So whatever is the best fixed deposit I could find, I have invested in that fixed deposit, and whenever these fixed deposit generate an annual return for me, I reinvest that money to my mutual fund and SIP that I have running in India. So by doing that, I am actually decoupling my currency problem here. One can also do something like shorting Indian rupee, but it's a very complicated topic, like shorting currency in the future and investing. But these are all done by big hedge fund managers. People like you and me, it will be very difficult for us to do all that. So I'm just telling you because that is a possibility. You can study yourself, and I think it's not very easy for retail people to do that. But usually what I'm doing is the income generation or the asset generation happens within India, and I'm reinvesting that to mutual fund and SIP so that I don't have to worry about moving funds around, or every month I don't have to worry about investing in the Nifty Bs. I don't have to track the Indian market, because in the long run I know Indian markets are going to perform well, and eventually I will make good returns. Another option is to invest in Canadian ETF that track the Indian market. These include ETF like Indie and India. So these are the ETF that actually tracks the Indian market, and the problem with these ETF is that they have higher management expense ratio, which is basically the commission you have to pay once you're buying an ETF. And that is a big downside, because when you consider some of the ETF that tracks the US stock market, the MER is way lower, and the US stock market also performs more or less the same compared to the Indian markets recently. So you are actually paying more commission and generating more or less the same return. So that may not be a best decision, but I'm just letting you know that there are ETF that's available. I'm personally not investing in these ETFs because I don't see much value, but if you're interested, if your thought process is different, definitely please let me know in the comment why you would invest in these ETFs. Another thing you have to understand is about the taxation rules. Because you're investing in India, you're transferring funds from Canada. If your investments outside of Canada is more than 100,000 Canadian dollars, you have to report that you are actually making investment outside of during the time when you're filing your taxes annually. You can talk to your tax consultant and understand these portion a little bit more, because I don't currently have more than 100,000 invested outside of Canada, so I don't really know about this. Another thing is, if your investment outside of Canada is more than $200,000, you have to list each one separately. So please make sure to keep track of where you're investing if your investment is way higher. Another thing is, Canada and India have a dual taxation agreement. That means if you're paying tax for your returns, capital gains you're making in India, you can pay tax in India and you can report that to CRA. So that will give you a tax benefit when you're filing your taxes in Canada. So you don't have to pay tax twice in India and Canada, which is actually a good thing. But you have to understand that you are only paying tax once you realize the capital gains by surrendering your mutual fund or closing down your investment account, right? So until then, you don't have to pay tax in India. So that means you're not making any tax benefits because you're not paying any tax. So that's all what I wanted to discuss in this video. What are the opportunities? Definitely retirement, diversification. India is growing. So all these factors make one thing that investing in India is a good opportunity, and it's actually a good opportunity, but make sure you understand the currency risk. What I'm doing right now is that my fixed deposit, that is an asset generating field for me, and whatever returns I'm generating with that fixed deposit, I'm reinvesting back to the Indian market, so I don't have to worry about any currency devaluation, and that asset keep growing. So currently I'm not living in India, so I don't need any return on that investment right now, or I don't want to withdraw that money, so I just keep it growing and I reinvest it back to India. So one fine day, if I want to go back to India, I can use that money. Second thing you need to understand is that there are different options: ADRs, opening up a NRI demat account, or using Canadian ETF that is India, etc. And that's all in this video. Hope you like this video. Please hit the like button. Thank you for watching.